Hi, and welcome back to Plant-Based Portfolio, where we explore all things related to investing and trading plant-based stocks. Our aim is to help you put your money where your mouth is and invest healthily in companies that align with your values, whether you live a plant-based lifestyle or not. In this video we will be breaking down the Beyond Meat Q3 2021 earnings report. We will view the quarterly performance compared with estimates, dig into the financial statements, and do a chart check. Then, we will review leadership commentary, peruse forward guidance, and end with our final thoughts. Be sure to watch the video through the end where we share one of our most favorite metrics to evaluate plant-based food companies. Before we dive in, feel free to smash that like button to let YouTube know that you value this content, and subscribe and click the notification bell to make sure you catch the latest videos. Awesomeness. Let's get started. In Q3 2021, Beyond Meat, ticker symbol BYND, pulled in $106 million in revenue, just beating estimates. EPS came in at -87 cents, missing estimates by 123%. That is a huge earnings miss and a terrible quarter for Beyond Meat, and the market concurred, with shares falling nearly 10% aftermarket. Moving over to the earnings report, starting with the highlights. Net revenue of $106.4 million was an increase of 13% year over year. This is weak growth. Gross profit was $23 million with a gross profit margin of 22%. Net loss amounted to $54.8 million. None of this is good news. Revenue growth of 13% is just barely above the 12% growth rate for the entire plant-based food industry. This means that Beyond Meat is likely giving up market share to a stronger competitor. Growing losses continue to haunt Beyond Meat, with the $54.8 million loss for Q3 2021. Dropping down to the 9-month data revenue segmentation, we see more pain. Of note, we prefer analyzing longer time frames such as 9-month data instead of 3-month data, as it gives a more comprehensive view of long-term performance. In the United States, revenue has barely increased year over year, with a meaningful 4% decline in retail sales. Luckily, food service sales rose 23%, more than making up for the retail slump. Clearly, customers are eating out more and buying less Beyond Meat in grocery stores. On the international side, strong retail growth of 186% has actually helped Beyond Meat a lot. International food service sales growth of 41% further solidifies the international market as Beyond Meat's strongest region. While Beyond Meat does not break out the largest sales locations in its international unit, it may be that continued lockdown measures internationally have led to continued growth of Beyond Meat's international retail unit. Importantly, for gross profit, we see that gross margins are declining, going to 22% Q3 2021 from 27% Q3 2020. Here would we expect rising costs for gross materials, likely influenced by inflation. We will check this when we examine the operating statement. Loss from operations was nearly 3 times larger than a year ago, which Beyond Meat blames on increased hiring, marketing, and consulting engagements. Okay, moving to the operating statement, let's view 9-month data. Gross profit grew about 7% year over year, despite gross margins decreasing year over year. Here again we see the effect of inflation and commodity prices. Looking at expenses, research and development cost more than doubled, while selling, general, and administrative costs rose about 50% year over year. The net loss was $102 million in Q3 2021, is a worsening of year over year net loss of over 250%. Sheesh mech geesh. Now for the balance sheet. Here we see $1.4 billion of total assets, with $886 million in cash. Assets outweigh the $1.2 billion in liabilities, composed of $74 million in current liabilities and $1.15 billion in long-term liabilities. The balance sheet is actually not too bad. Let's move down to the cash flow statement. Losses from operations amounted to $191 million, and losses from purchasing property, plant, and equipment was $104 million. These capital expenditures, or CapEx, are being used for Beyond Meat to build new factories and distribution centers. so the free cash flow is negative at about $295 million for 9 months of operation. Extrapolated to an annual basis, we can expect Beyond Meat to burn $400 million a year. With $886 million in cash on hand, Beyond Meat has about a 2-year runway before they need to raise more money. So now let's go to hear what CEO Ethan Brown has to say. Our third quarter results reflect variability as we saw a decline from record net revenues just a quarter ago. Despite current disruptions, we remain focused on rapidly advancing key building blocks of long-term growth, whether scaling products and infrastructure for our strategic quick-serve restaurant partners, bringing new product to retail markets, or investing in innovation, commercialization, and production capabilities here in the United States, Europe, and China. We believe we are steadily executing against our vision of being tomorrow's global protein company. Here Brown is saying that Beyond Meat is focused on growth and expansion. He continues, near-term market and operating conditions notwithstanding, we remain committed to our long-term strategy as we continue to advance the field of plant-based meat through innovation and bold investment in domestic and global operations. The consumer is only being made more aware of the relevance and urgency of our mission. And although we see continued uncertainty for the balance of this year, we look to 2022 with enthusiasm as we expect to bring to life, together with our strategic partners, product and production capacity that we've been steadfastly investing in throughout the pandemic. So Brown is basically telling us to get ready for more choppiness ahead. This is definitely not a buy signal. As far as Q4 2021 guidance, Beyond Meat expects revenue in the range of $85 million to $110 million. At its best, Beyond Meat is expecting a 2021 annual revenue of $473 million, which would only be a 16% increase from 2020 annual revenue of $407 million. Jumping to the 1-year chart, we see that the price has been trending down from a 52-week high of about $221 per share to a low of about $77 after earnings. Zooming out to the 5-year chart, we see that there may be a support around $75. Final thoughts. Beyond Meat's revenue growth has slowed tremendously this quarter, and costs are rising related to wages, commodity inflation, logistics, and marketing. As stated previously, rising cost and slowing sales are a recipe for earnings disaster. Support appears to be near $75 per share. Short to mid-term expectations poor due to the rumored IPO of Impossible Foods, adding more competition in both the stock market and your local grocery. Long-term, Beyond Meat seems to be taking advantage of the growing plant-based food expansion and will likely have a position in the market over the next decade. Whether it will be the prime publicly traded plant-based food company remains to be seen. So now let's explore cash conversion cycle, one of the best metrics when evaluating plant-based food companies. As defined by Investopedia, cash conversion cycle is a metric that expresses the time, measured in days, it takes for a company to convert its investments in inventory and other resources into cash flows from sales. Also called the net operating cycle or simply cash cycle. CCC attempts to measure how long each net input dollar is tied up in the production and sales process before it gets converted into cash received. The formula for cash conversion cycle is days of inventory outstanding plus days sales outstanding minus days payables outstanding. So now, using our handy dandy calculator from Omni Calculator, we just input the data from the Beyond Meat earnings report. And here we see that it took 37 days for Beyond Meat to get paid by their customers, 203 days for inventory to be sold, and 48 days for Beyond Meat to pay their suppliers. This results in a cash conversion cycle of 192 days. The lower the cash conversion cycle value, the better, as it indicates fast turnover in the business cycle. As a standalone value, this number is not really that helpful, but compared with Beyond Meat's cash conversion cycle over the past few years, we see that the trend is increasing, which is not good. So, can Beyond Meat finish 2021 strong? Odds are not in the company's favor. However, Ethan Brown has proven to be an innovative leader, and Beyond Meat will definitely need strong leadership heading into 2022. We will be closely following Beyond Meat for the remainder of the year. Many thanks for watching. We hope you enjoyed this video and found it informative. If so, please subscribe, like, share, and comment below. We would love to hear your thoughts on Beyond Meat, their earnings, and plant-based stocks. Join us in the next video and don't forget to put your money where your mouth is and invest healthily.